Hello and welcome to Business Incorporated live on Channels Television. Yes, it's the last full trading week of 2025. Hope it's been, good to you at this point. But here are the stories you should be watching out for. Markets on edge as Nigeria prepares to release its November inflation data. With inflation declining right now, investors are watching closely for any signs of economic relief. The African Development Bank is launching a $25 billion fund drive to support low-cost lending across the continent, stepping in as a traditional donor. And gold prices on rise, boosted by a softer dollar and eased yields as investors await key U.S. jobs data. Silver holds steady, reflecting cautious optimism. It's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets now, starting with metals. See gold's climbing as softer dollar and lower U.S. yields. That's lifting investor sentiment, while silver remains steady. Markets on edge, eyeing upcoming U.S. jobs data for clues on the health of the economy and potential shifts in monetary policies there. And we're seeing platinum, palladium, that's in red, but platinum, what a performance this year, $1,741. This was trading start of the year, about $1,000, $900 to $1,000. But there you have it, $1,741 per ounce. Spot silver, yeah, $62.48, up 0.8% today. U.S. gold futures, that's $4,354 per ounce, 0.6% up. We see spot gold following in the green. So it's 3 greens against 2 reds right there in the metals market. Let's get a check on oil now. We've seen oil prices. They're holding steady today as market is weighing supply risk from rising U.S.-Venezuela tensions against oversupply concerns and hopes for a Russia-Ukraine peace deal. U.S. sanctions and recent tanker seizures have sharply cut Venezuelan exports, while more interceptions are reportedly planned, keeping investors on alert over global oil supply. And there you have it, just about 2 basis points drop there, $61.11 a barrel, big 4% drop last week for both benchmarks. And we see WTI crude $57.37 a barrel, down 0.12% to start this last trading week of 2025. Some analysts say the unfolding geopolitical moves could ripple through energy markets worldwide. So a lot to watch out for right there in the oil market. All right, to other countries now in Africa. South Africa's central bank is proposing a centralized cash management utility to streamline how physical money is moved and accessed, designed to cut inefficiencies in a system still heavily reliant on cash. The new framework, jointly owned by banks, retailers, and stakeholders, aims to improve distribution, forecast demand, and lower costs, especially for rural and low-income communities. Analysts say that it could reshape cash handling across the country while supporting the digital payment transition. Meanwhile, South African rand strengthened today, boosted by rising gold prices and upbeat sentiment in commodity markets. Investors are closely watching the year's final economic data, including trade, inflation, employment figures for signals on the country's economic direction. Analysts also say the move highlights how closely South Africa's currency and markets track both global commodities and domestic economic trends. And South Africa's Minister of Electricity, Ramaphosa, says the country has found a clear path towards energy security, one that also opens opportunities to deepen industrialization and create much-needed jobs. The minister was speaking in Pretoria, where he addressed the media on the pre-qualified bidders under the first phase of the Independent Transmission Projects Procurement Program. Take a listen.
In the right direction, we have found our path to energy security. We are discovering our path to broadening the industrialization and creating the necessary jobs. And energy is going to be a catalyst. Like I said when I started, energy was a crisis, is the one that throttled and stifled economic growth. Now that the ESCOM has done tremendous work, thanks to the work of the board and the ESCOM management team, the grid is performing. On any, we've got more than enough electricity. But we're in the business of growing the South African economy. We don't celebrate that the units are on cold reserve. We must give that the electricity to industry, and that's why we are finalizing our discussions with the smelters. all of them. Of course, we started with Samanco and Glencore. We are going to expand to all of them so that they must restart the smelters. The furnaces must start working. Once the furnaces are restarted, the smelters, then people are into jobs. We are fighting hunger, we are fighting unemployment. The South African economy is going to grow. So really, this is what we have come to announce, to say that we are moving in the right direction. We will never be faced, we don't want to be faced with a situation of load shedding.
All right, let's look at East Africa now. Kenya has launched its biggest privatization drive in nearly 2 decades by moving to sell a major stake in Safaricom, the country's most valuable state asset, in a landmark deal aimed at boosting public finances and seeing a new national infrastructure fund. The government's planned sale of part of its Safaricom holdings to South Africa's Vodacom comes amid rising debt pressures, shrinking aid, and political sensitivity over tax rises, highlighting the tough fiscal choices facing Nairobi as it seeks to fuel growth and investment. And the African Development Bank is launching a $25 billion fundraising drive to boost low-cost lending across the continent, stepping in as U.S. support wanes. The move aims to fund infrastructure, development projects, and economic growth in Africa's low-income countries. Analysts say this ambitious push could reshape investment flows and open new opportunities for businesses and governments alike. Let's look at trading on the continent now. Starting with the NGX, you see Nigeria's equities market there kicked off the week. And it makes note with the all-share index just edging up about 4 basis points. Gains were led by Mercure, Unicel, Chams, UPDC, and Sovereign Insurance, while banking stocks showed modest recovery with Access Corp, Zenith Bank in the green. On the downside, consumer goods, insurance sectors lagged. Investors exchanged about 196 million shares worth 4.7 billion this intraday trade, with Cornell PLC topping volume trades and Vitafoam leading by value. That's what's playing out right there at intraday. Then we see for the Johannesburg Stock Exchange, 0.13% down, 13,158 points. Other markets we track on the continent, we see for North Africa there, the EGX 30, 0.44% up, 42,250 points. Starting this trading week strong. Then with the Nairobi Stock Exchange there, 0.5% rise, and that's for the Friday trade. In the Middle East now, starting with UAE, sentiment appears to be largely driven by corporate announcements, board meetings, as is common in the run-up to the close of a financial year. Major drivers right there for the Dubai Index, Dana Gas, showing significant upward movement, which often provides a strong boost to the overall ADX sentiment due to its regional significance. We also have Waha Capital showing positive movement following its recent trading suspension and resumption after corporate disclosures. Then we see Dubai financial market has been influenced by corporate actions and specific real estate bank movements. Key gainers, we see Emirates NDB, a key financial stock, providing significant support to the DFM index. Drake and Skoll International, Gulf Navigation, seeing strong percentage gains, typical of lower cap stocks, following various corporate updates. Then other parts of the market there for Saudi, the TASI opened lower, and it's traded mostly flat or slightly negative for the day. Overall sentiment is weighed down by weaker oil prices, global oil price volatility. That's continuing to put pressure on the TASI as the market is heavily linked to energy and petrochemical revenues. And we also see profit taking there playing out. The index is undergoing a period of consolidation and correction after previous losses and is struggling to hold major support levels. Then for the Qatari index, 0.72% down intraday, facing downward pressure today, extending the negative movement from the close of the previous trading session, which was yesterday. The index is being driven, dragged lower by its heavyweight banking stocks, key financial institutions, notably Qatar, the Qatar National Bank, that's QMBK, and Qatar Islamic Bank, registering negative movements, dampening the overall market's sentiment, countering the broad negative trend. Select mid-cap stocks are posting strong gains. The likes of Wyndham Food is a notable outperformer, climbing significantly on corporate news, while Commercial Bank Qatar is also showing positive momentum. So that's a color right there in the Middle Eastern markets that will try. Let's take it on to the U.S. now. See U.S. stock futures now mixed, but strongly in the red. We see the Nasdaq, tech-heavy Nasdaq again, 1.69%. So we're seeing this last trading week of 2025 is looking quite choppy, at this point, and the futures market giving us direction on what to expect. The Dow Jones Industrial Average 0.51%. Down. Traders are bracing for a busy week of, U.S. economic data. Take it on to the U.S., to Asia markets. Asia markets opened higher with Japan's Nikkei, South Korea's Kospi leading gains as investors, that digesting U.S. economic data and corporate earning updates. But we see the close in red there. The Nikkei 1.31% down, 50,168 points. Hang Seng Index also deep in red, 1.34. So this gives direction on what to expect, I guess, for U.S. markets. Analysts say the region is navigating mixed global signals, including rising commodity prices, anticipation of key policy announcement, making this week crucial for market direction. Other markets we track there now for the Nifty, also down 0.12% to close, 26,015 points. Let's get a check now what's playing out in Europe. We have Lars Holter right there. Great to have you, Lars. What's the color right there for the markets in Europe?
A lot of red on your map here, and I can actually for once add some green. Markets here out of the gate for this last full trading week of the year, and they're all doing pretty good. We have Spain, the IBEX, we have the CAC 40 in Paris, we have the FTSE in London, all up about 1%. The DAX in Frankfurt, as so often, is running a little bit slower, but still up 0.5%. We don't have, however, too many topics, at least not too many economic topics. Of course, top of the list when it comes to what people are talking about here is, of course, the currently ongoing meeting between Ukraine's President Volodymyr Zelensky with U.S. envoys and some others here in Berlin. And they're once again trying to get closer to a peace deal and an end to the war. Looking at markets specifically, it really only has a minor effect so far in as much as defense stocks are down, Ladi.
Right, and speaking of Ukraine and President Zelensky being in Berlin today, new round of peace talks. What can you tell us about what's happening there?
Yes, indeed, Ladi. Zelensky arrived in Berlin yesterday. There was an immediate round of talks for 5 hours, but not actually with Chancellor Merz present. Today, talks continue. But it is actually mostly Ukraine and the U.S. talking, specifically Zelensky's delegation and U.S. President Trump's special envoy Steve Witkoff and son-in-law Jared Kushner. Finland, Norway, Italy, and Poland are at the table, as well as his EU Commission President Ursula von der Leyen. And talks will center on Ukraine's response to a so-called peace plan that the U.S. and Russia had recently hashed up, with, as we often discussed here in this forum here, with no input at the time from Ukraine and its European partners. We don't know all the details about the talks yet. But first and foremost, of course, the partners want that for a ceasefire. The current battle lines should be frozen where they are right now. We also know Ukraine wants reliable security guarantees for the future. President Zelensky said that, quote, only reliable guarantees can deliver peace. And in order now to achieve that, to get such solid security guarantees, Zelensky has said he might be willing to drop his country's bid to join NATO. Zelensky emphasized that any Western security assurances, however, would need to be legally binding.
The mood in Germany with regards to the current talks and, general situation in Ukraine.
Oh, well, Ladi, similar than the rest of the world. Of course, people here want this 4 years long war to finally end. It has been an absolute terrible time for Ukraine, with hundreds of thousands dead, millions displaced, and large parts of the country destroyed. The war has also been a geopolitical game changer for Europe. We are seeing Russia as a bigger threat than we have in decades. And at the same time, the decades-old alliance with the U.S. has been weakened. Chancellor Merz just said this weekend that, quote, the Pax Americana is largely over for us in Europe and for us in Germany here as well. Meanwhile, however, we've also heard from the business community, and they are also getting together today for the German-Ukrainian Business Forum. Companies here are saying that considering how much money Germany is spending on Ukraine, they are expecting to get something back in return, specifically orders and business when it comes to the rebuilding of the country there. Many in the German business community are worried that Germany might be leading in support for Ukraine in times of crisis, but that in the end, maybe Chinese or Indian companies or such might end up benefiting most from the rebuilding effort. The business community here wants future Ukraine help tied to prospective orders, to jobs there, to work there, so that some of the money we're spending here, and we're talking after all billions of euros, at least part of that can later be recovered in some shape or form.
All right, definitely. We're hoping for peace right there. Thanks so much, Lars Holter. We'll see how this week plays out for most of the markets that we track. Thank you.
Certainly. Thank you, Ladi.
All right, let's take it on to the crypto market now. See, UK government have announced that formal regulation of crypto assets will begin October 2027, giving investors and businesses a clear framework for digital assets operation. The Finance Ministry says the move is aimed at protecting consumers, reducing fraud, and providing clarity to the fast-growing crypto market. Experts say the timeline gives the industry time to prepare while reinforcing the UK's commitment to being a safe and competitive hub for digital finance. Then El Salvador, they continue to hold their Bitcoin, a big bet on Bitcoin at this point, with the country's holdings surpassing 7,500 Bitcoins so far. The government says these purchases strengthen its national digital strategy while aiming to boost financial inclusion and economic resilience. Experts are noting that El Salvador remains the first nation to fully embrace cryptocurrency at this scale, keeping global eyes on how this unprecedented approach impacts both local economy and the wider crypto market. And we see Ukraine, Nigeria, and Vietnam, they're leading global adoption. A new report from Bybit highlights, these three countries are leading, adoption with necessity-driven crypto adoption right there in regions where the traditional banking, falls short. Residents are increasingly using digital assets for remittances. So that's the picture right there. All right, so first off, let's get a quick conversation now with Sheo Dania to help us understand this cryptocurrency adoption data. It's continued to accelerate, driven not only by speculative investment, but increasingly by necessities, with the data showing countries like Ukraine, Nigeria, Vietnam, leading when it comes to necessity-driven crypto growth. All right, Sheo, great to have you. Welcome. Compliments of the season. What are the key factors driving necessity-driven crypto adoption in countries like Ukraine, Nigeria, and Vietnam?
So traditionally, when people hear crypto, everybody thinks about volatility, speculation, and hype. But we know that globally, in 2025, as we speak now, that picture is completely outdated. And crypto adoption has entered a new phase, which is driven less by excitement and, as you mentioned, by necessity, regulatory clarity, and real economic use. So with that data that you have mentioned, for Nigeria, it's not because of speculation, it's because people need alternatives to slow, expensive, and unreliable financial systems. And it's telling us what crypto has become. In a country like Ukraine, where you know that there are wars, there are a lot of embargoes, there are a lot of things that are happening where people see the need to be able to hedge their money in globally usable transactions, which is primarily crypto-based. In Nigeria, we know that because of FX volatility, the need for cross-border payments and cross-border trade, and also the need to invest in alternative assets that has made a lot of Nigerians become to use crypto. I think the gig economy is also functioning well using cryptocurrency.
Right, and definitely before now, it was mostly about people trying to make 1,000% gains, in this market. So how much of global crypto adoption, in 2025 is, speculative versus necessity-based at this point?
I really cannot say, but I know that globally, we have over 500 million people who have or use some kind of crypto. worldwide. And so that already tells us that people are, of course, holding on for savings uh, with assets like Bitcoin because of the popularity. Those we can say are speculative. But we can also, I know for sure that the stable coins are the real adoption story. And the global stablecoin market is worth well over 200 billion US dollars. And USDT, dominating that global stage. People are now looking for ways to make things happen, not because they're excited or they just want to, make 1,000%, as you said, but people are, facilitate payments faster, hedge FX, and also do a lot of their business day-to-day transactional payments. If we look at the real-world use case, and recently just concluded Abu Dhabi Grand Prix, we saw that stablecoins were accepted as payments. The Abu Dhabi global market they formally recognized USDT as an expected fiat reference token. So during the Grand Prix, and not just for visitors who were there buying coffee, which was applicable, but in terms of businesses and all the companies that were there being able to exchange value in real time and being able to conclude transactions at the speed of light. So we see this kind of, we were able to use that as a real world use case. We see that it's beyond the excitement, beyond the hype. Now people are adopting cryptocurrency for the actual use of it.
All right, and talking about adoption, regulation is definitely playing a big role at this point. When you look at these countries, how would you say regulation is, advancing, adoption? Is it making them want to adopt cryptocurrency more, or do you think regulation is, making people kind of move away, from cryptocurrency? In your opinion?
So, regulation is a key driver for adoption. In the EU, we know they have MiCA. The US has approved crypto ETFs. As you mentioned earlier, the UK has a clear regulatory roadmap. Countries like the UAE, Singapore, Japan, they have frameworks that are enabling. And they understand one thing: that capital does not enter where there's chaos. If there are no laws, then there will be chaos. Capital goes where there is clarity. And with regulation, the countries that have clarity, that are not stopping crypto activity, putting in the right frameworks, are where capital will flow to. Other places where you have on unclear regulation, you see that a lot of capital will not be flowing into those countries because people are not willing to invest where there's no law. In countries like in Nigeria, for instance, Nigeria will see that there's been a pivotal change from where we were before, which is a full outright ban on anything cryptocurrencies. So now us having a lot more clear regulation from the SEC. We also see that the FIRS or the tax agencies are also looking at how they can tax earnings from crypto, which signals to us one thing that Nigeria is ready. Once you are ready to tax, you are ready to regulate properly. Basically, they want to have insights as to how people invest, how people make money, and the country itself will benefit from it. We also know that the stable coins like CNGN, all those still in the regulation incubation program with the SEC, is also growing large adoption, which is allowing Nigerians to be able to transact with Naira digitally faster with all the advantages that the blockchain technology has to offer. So for many Nigerians, crypto is now is practical money management. And Nigeria is no longer banning it. Nigeria is out there. The current administration is doing so much to ensure that they put laws in place which will attract both local and foreign investors, and the country will be well off.
All right, definitely we'll keep tracking, adoption at this point. We also have, the likes of CNGN and, countries also releasing different stable coins at this point. We'll see how it goes. Thank you so much. Show Danny, it was great having you, and enjoy the week, this last full trading week of 2025.
Yeah, have a Merry Christmas.
Fantastic. Thank you. All right, and while we're speaking, we have breaking news. Nigeria's inflation numbers. That's for November. That is out right now from the National Bureau of Statistics, and they have it 14.45%. That's the inflation numbers for November from 16.05%. That was in October. So we see a big drop there. So, definitely that trend, continues. And, definitely we've, gotten some forecasts for inflation in 2026. Maybe we get to single digits, at this pace. But thank you so much for watching. We're bringing more updates on what drove this recent inflation number there for November. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.